Good afternoon. I'd like to start by welcoming our stakeholders tuning in to our virtual meeting. Today's meeting will include reports from the FASB Chair, the GASB Chair, the FAF Executive Director, and the FAF Treasurer. We will also receive reports from the latest activities of the Private Company Council, the Financial Accounting Standards Advisory Council, and the Governmental Accounting Standards Advisory Council, as well as a report from the Trustees Standard Setting Process Oversight Committee. Before we get to those reports today, I'd like to acknowledge the appointment of Adam Rourke to the Private Company Council. Adam will replace Rick Reisig, who stepped down when he joined the FAF Trustees in January. Adam is a director for DHG's Assurance Innovation and Methodology Group. Adam works alongside the Professional Standards Group and serves as a technical resource on auditing and accounting matters. We want to welcome Adam today and thank Rick for his service to the PCC. I would also like to take some time to acknowledge FASB board member Hal Schroeder, as this will be his last Board of Trustees meeting. Hal's term will end in June of this year. Hal will be retiring from the FASB after serving over 10 years on the board. He joined in February of 2011 as part of the expansion of the FASB board from 5 to 7 members. Hal's background as both an auditor and his extensive investor experience, particularly with financial institutions, were a valuable addition to the FASB board as it finalized needed improvements to transparency identified in the 2008 financial crisis. The FASB accomplished much during Hal's tenure, finalizing many standards on revenue recognition, leases, credit losses, insurance, and hedging, just to name a few. Anyone who has spent time with Hal knows that he is passionate about loan loss accounting. In that respect, Hal was certainly the right person to serve at the right time as the chair of the Transition Resource Group for the Current Expected Credit Loss, or commonly referred to as CECL standard implementation. Hal has been instrumental in assisting the FASB in understanding the perspectives of investors and in translating that into the accounting standard setting process. He is also a champion of thinking about how investors consume information, as well as the role of technology, working very closely with our XBRL team. We want to thank him again for his dedicated and truly outstanding service and look forward to hearing about all of his future endeavors. Hal, thank you again for your phenomenal service to the FASB. And though we will miss working with Hal, we are also pleased to welcome Fred Cannon to the FASB board. Fred has almost 40 years of experience, having held multiple roles with a strong focus on research, equity strategy, investor relations, and corporate communications. He most recently held the position of Director of Research and Chief Equity Strategist for Keefe, Bruyette & Woods, Inc., a subsidiary of Stifel Financial. Fred begins his term on July 1st, and we welcome him to his new role. As the FAF, FASB, and GASB begin planning a return to their offices in person, I would like to take a moment to acknowledge and thank once again the boards and staff for their continued dedication to our mission. Over the last year and a half, as we adjusted to remote work, stakeholder concerns and needs remained a top priority. With that, let's move on to our regular agenda. And the first item of business is to approve the minutes from the board's February 23rd, 2021 meeting. May I have a motion?
So moved.
And a second.
Second.
In favor?
Aye.
Aye.
Opposed? And the motion carries. Thanks very much. So the next item on our agenda is to move to the reports from the FASB, PCC, FASAC, GASB, and GASAC chairs. We'll start with the FASB. Rich?
Great, thanks, Kathy. And once again, we had another busy quarter here at the FASB. We are certainly aware of the challenges many of our stockholders face, and we thank them for dedicating the time and effort to participate in our process, because it's only with that participation that we're able to successfully fulfill our mission. So during the quarter, we made significant progress on our existing agenda, our post-implementation review activities, as well as our agenda outreach initiative. And I'd like to cover each of those three in a little more detail. When it comes to our existing agenda, we issued 3 final standards during the quarter. The first was a standard related to reference rate reform that dealt with emerging issues associated with the migration from LIBOR. The second was a standard to reduce unnecessary complexity and improve financial reporting of private company franchisors accounting for revenue recognition. And the third was a standard to simplify and improve the accounting for private company goodwill impairment evaluations. I will say that I'm very appreciative to our teams and our stakeholders. These were all three issues that needed to be addressed on a timely basis to keep financial reporting functioning smoothly and appropriately in a challenging time. So thank you for participating and thank you for helping us with our mission. Shortly after quarter end, we also issued a final standard on accounting for certain modifications of equity classified written call options. Throughout the quarter, we continued to make substantive progress on our existing agenda, including defining the direction of our projects, proceeding to exposure documents, and when necessary, removing projects from our agenda so that we focus on our most important and achievable projects. We also made great progress on our non-authoritative concept statements project, and I know my board members and many of our stakeholders are looking forward to the successful update of that important tool for the board. Moving on to the post-implementation review process, we continue to make good progress on our post-implementation review related to leases, the current expected credit loss model, and revenue recognition. The results of our PIR continue to be discussed at public board meetings and shared in a dedicated section of our website. During the first quarter, just to give you some perspective, we met with over 150 stakeholders as part of this process. I'm also looking forward to our public roundtable on CECL that will occur tomorrow morning and continue to be impressed and thankful for our stakeholders' willingness to engage in our process. Moving on to the third leg, agenda consultation. I will say, since kicking off this initiative in December 2020, we've met with almost 200 stakeholders and all of our advisory groups to hear their perspectives, and that number is growing every day. We're in the process of pulling that input together in an invitation to comment that will be made available on or about the end of the second quarter. That document, which will have a 90-day comment period, allows all of our stakeholders the opportunity to comment on what they think should be our highest priorities. And finally, I'd like to echo some of Kathy's comments recognizing Hal Schroeder. While Hal will be embarking on what I will call a 6-week Zoom tour of goodbyes, I wouldn't let this meeting go by without saying how appreciative we are to all the work that Hal has done over the past 10 years. As you've heard from Kathy, Hal has left his mark on all of our standards over that period of time. As with any change, though, as we say goodbye to Hal, we are looking forward to Fred joining us. He's with us now. He's fully transitioning so that he's able to be up and running when his term starts on July 1st. So with that, let me turn it back over to you, Kathy, to see if there's any questions.
Do we have questions for Rich? Mary.
So, Rich, the ISB also has a project on goodwill. Are you working with the ISB and how is that going?
Oh, thanks, Mary, and that's a great question. So actually, at the end of last year, we had a joint meeting with the ISB where we both shared different perspectives and different information that we had on that project. And I will tell you, that's the first of what will be of additional joint board meetings on that project. So you'll see a meeting likely sometime this summer and possibly in the future where we will discuss that topic. I think that's a good indication, though, that there is an active sharing of information and feedback between the boards and the board staff. To the extent that they're working on something, they provide us with insight, and we do the same. And I think it's very helpful because as we all recognize, whether we decide to have the same answer on an issue is part of the cost-benefit framework that's extremely important for the boards to consider.
Thank you.
Hey, Rich, I wanted to compliment you on the openness and inclusiveness, the transparency level of the post-implementation review and easy accessibility of documents. And I'm sure we've gotten some feedback so far on CECL, so I'm wondering if there are any early indicators you can share of what we've heard so far.
Sure, and some of the things which will actually be the subject of some of our discussion tomorrow, it's to confirm really from the investor perspective, what information are they getting, how are they using it, are they finding it useful? I think one thing we've certainly heard is that the investors find the additional information under CECL helpful. I think it's certainly a challenging environment that we're operating in. A couple other areas that we've heard, though, were questions regarding the acquired loan model. We have two separate models for acquired loans, depending on credit quality. Do those make sense? Are they providing relevant information? And I think the other thing that we've heard is questions about the troubled debt restructuring model. Is that differentiation key now that we're on an expected loss model under the new accounting standard? So I think we'll hear some about those things, Tim, and as well as other perspectives from our different stakeholders.
Tim Ryan?
Yeah, thanks, Kathy. Rich, I know one of the things you mentioned and we talked about at the Oversight Committee, you've gotten a lot of input on the initial agenda consultation process. Want to just give us a sense as to some of the things you're hearing in the early, as you look to set that agenda, some of the early feedback?
Sure, Tim. And I will tell you, I've been very impressed with the different perspectives that we've heard. But we've heard about 40, I would say, general categories of input where people are looking for action. And about 15 of those are items that we're hearing more than once. I think from the investor perspective, one of the common themes that's coming through is it's really a trend on disaggregation of data. It's how do we take the information that we get today and how do we provide more insight into that information to help users versus changing the measurement of it, which I think is kind of interesting. But I think that's a kind of almost like a logical extension of the information age that we're in. Some other things that we're hearing is maybe there should be some US GAAP accounting standards related to, for example, government grants. Is that an area that possibly we should focus on? And a recurring theme, and probably one of the more challenging aspects of GAAP is the lines that are drawn today between liabilities and equity. We have some active projects on our agenda, but are there more improvements that we could make in those areas? And some have even suggested maybe we should start over. So understanding that feedback and what's the best course of action, I think will be a good output from this process. So thanks, Tim.
Other questions for Rich? If not, thanks very much, Rich. We'll now move on to the report of the PCC Chair, Candy.
Thank you. Nice to be with you this afternoon. Appreciate the opportunity to provide a report. I believe it is on page 134 of your materials, and I'll just highlight a few of our technical activities that we have been working on since I last met with you publicly in August of 2020, and I'll also talk about some of our outreach projects. So we continue to have discussions regarding the Practical Expedient project on grant date fair value measurement for equity classified share-based awards. We had our redeliberation discussions in our April PCC meeting. We made some decisions and the staff is working on a final draft document. And we will be considering this document at our June meeting. I believe it is the 21st and 22nd. And we will be considering whether or not to make a recommendation to the board for final endorsement of this project. We are also continuing to perform outreach and research relating to profits interest and their interrelationship with partnership accounting. We have a working group that consists of 3 PCC members and also a member of the Technical Issues Committee. And actually, he was just appointed to the PCC, as Kathy just announced. So now we're all PCC members, I guess. And we've been doing outreach with various stakeholders in this space. And a summary of that outreach was presented at our April meeting. And we look forward to continuing our work in this area. We hope that there will be some guidance and some relief, that we were able to make in this very complex space. We also continue to provide input on the projects that the board is currently working on. I want to thank them for the final standards that Rich just talked about, which gave private companies relief in a couple of different areas, franchise fee revenue, and also in the goodwill space relating to the triggering event. It's much needed guidance, and we really appreciate the board taking action in those areas. And we are also providing input, as he mentioned, on the agenda consultation project. We have a discussion at each of our PCC meetings relating to the current financial reporting matters that may arise during COVID-19. We've had that at every meeting since the pandemic, and we will continue to have those discussions to address any issues that are coming up from the private company stakeholder group as the environment dictates. So moving on to outreach, which is a high priority for the PCC. Our success is somewhat defined by the input that we receive from our private company stakeholders and the issues that we are able to address. So we continue to use social media as a method of communication and to alert the private company stakeholders as to our activities. We also use town hall meetings as a way to reach them, and we have had 2 of those that I would like to discuss. So we held a town hall meeting in September of 2020 with the surety industry, and this was our first town hall meeting with this group. It was a very, very good meeting. We had a lot of good dialogue, a lot of good discussions about various topics. We discussed the implementation issues that they may have seen as users of financial statements relating to topic 606, revenue recognition. And then we also discussed standards that most private companies have not yet implemented, which relate to leases and the impact that they believe it may or may not have and what they hope to gain from that information. So it was a very, very good discussion. And then in April, we had a town hall meeting with the Risk Management Association, which is primarily community bankers, make up that group. And we had good discussions relating to topics of mutual interest. And this group also provides education to a lot of the lenders in the community banking arena. So we're able to provide input into that education materials as well. So it's a good win-win for both organizations. And I would also like to acknowledge that we have 2 new members since I last met with you. They are Robert Messer and Doug Yule, and they have backgrounds as a user and a preparer. And so they have jumped in and are already providing great insight and good input into the PCC matters. And so we look forward to continuing to integrate them and work with them and gather their feedback. So with that, I'll turn it back over to you to see if there are any questions.
Thanks very much, Candy. The questions for Candy. Candy, thanks again for your report. Appreciate it very much. Our next report is from the chair of the FASAC. Michael?
Thanks, Kathy, and good afternoon, everyone. I'd like to, my report can be found on master page 141 in your material. That report includes activities through the end of March. We also extended the reporting date on that report to give you a little insight into our early April lean-in session on the agenda process. And I'll also highlight some recent and upcoming activities. The March FASAC meeting, it was the first meeting for 8 new council members. We had an orientation session for those newly appointed members. And we also held our annual administrative meeting that included a self-review of our operations and effectiveness. The March 9th meeting included discussion on 2 topics. First topic was on investments in non-financial assets. During that session, FASAC members discussed the pervasiveness of investments in non-financial assets, including commodities, digital assets, arts, collectibles, and whether improvements to the accounting for or disclosures about investments in non-financial assets are needed. Overall, council members indicated that investments in non-financial assets are insignificant or non-existent in many companies, but may become more prevalent in the future. Investors and other financial statement users indicated that investments in non-financial assets generally are insignificant for the companies they analyze. If material, they would want transparent disclosures about the amount and type of investment, management's intent to utilize the asset, and the impact on the financial statements. Some council members noted that given the lack of pervasiveness, improvements to the accounting for investments in non-financial assets is not an urgent issue for the FASB, and generally indicated that having consistency in the accounting for investments in non-financial assets could be beneficial. The second topic was an educational discussion on the FASB agenda criteria and agenda consultation process. We did this in anticipation of the fact that we were going to be meeting in April to go through the agenda process. So we thought it was important, especially for new members, to understand what goes into items being added to or taken off the agenda. So we had a good run through on that, including the prioritization process itself and the board's cost benefit considerations. And we emphasized the importance of continuing to include all types of stakeholders in the outreach through various project stages. On April 8th, we held the lean-in session to solicit council members' views about 3 key financial reporting areas selected by the FASAC members. Those views are part of and will continue to be part of our agenda consultation process. We discussed financial reporting, including non-GAAP metrics, environmental, social, and corporate government disclosures, and presentation of the statement of cash flows. And I think we had a robust discussion on all of those points. And I would echo one of the comments that Rich made. There was a common theme around the importance of the attractiveness of disaggregation in those. At our upcoming meeting on Thursday, June 24th, we anticipate the topics will be complex and subjective areas of financial reporting. For this discussion, we're going to focus on a new data set that we have, the critical accounting matters. Specifically, what are some of the most common CAMs? What can we learn about GAAP accounting and disclosure requirements in those areas? Given the time and effort that's spent in those accounting areas, are the results providing useful information to investors that justify the cost and effort required? We're also going to have a session on the implementation of leases as part of the board's post-effective assessment of the costs and benefits of the leasing standard. This will be our second session in a series of discussion focusing on council members' assessment of benefits and ongoing costs now that a little more time has elapsed since the adoption of that standard. We've also updated and included our longer-term outlook of potential FASAC topics for 21 and 22, which is on master page 148 in your document. That tends to be a fluid list, and would welcome your input on these and any other topics that you think FASAC should consider in the future. And I'd be happy to take any questions that you might have.
Thanks so much, Michael. Are there questions? Mary.
Michael, thanks for your report. I had the pleasure of observing your lean-in session that you talked about, and I agree. It was really robust, very interesting meeting, a lot of wide-ranging views. And it always makes me wonder how you follow up later to see the extent to which the FASB was actually processing those views and making decisions and reporting back to the FASAC, for example, about what got implemented or not implemented and how that whole cycle works. Can you comment on that?
Sure. Thanks, Mary. I would say it's very much an iterative process. We have a steering committee that consists of FASAC members, and members of the board also participate in that. And that's really our opportunity to sort of take those pieces and understand where we can address them perhaps in more detail in the future as they evolve, as the board continues to discuss them. And then I think in general, Rich and I have a good ongoing dialogue about teasing out some of the comments that might have been there and understanding how best to go back and readdress them over time. So I think it's a good give and take in that regard.
Thank you.
Other questions? If not, thanks so much, Michael. We will move on to the report of the GASB chair. Joel?
Thanks, Kathy, and good afternoon or good morning, everybody, and depending upon where you are. I appreciate you taking the time to hear about what we've got going on at the GASB. We had a busy first quarter, which is leading into an equally busy second quarter. I think probably the most significant thing we did the first quarter was that we early in the quarter hired and announced the hiring of our new Director of Research and Technical Activities, Alan Skelton. He joined us in the middle of the quarter, and then he officially took over after a 6 weeks transition period with David Bean, effective the first day of the second quarter. So we're really excited to have Alan on board. He has certainly hit the ground running, and we're moving forward. On our technical agenda, I'd like to maybe highlight the big three and progress we made on those. I think since the NBA playoffs are starting, maybe it's important to note this isn't the Brooklyn Nets big three, not KD and Harden and Kyrie, but a technical, maybe, you know, for us, it's as exciting as the Nets big three technical topics. But the first one is the financial reporting model, which had an exposure draft come out after an extra long 8-month comment period. That comment period closed at the end of February. We got a lot of significant comments, which we, like Rich, want to thank our stakeholders for taking the time during that 8 months to really go through the exposure draft and provide us with a lot of good feedback. And so we went from getting all those comment letters to starting public hearings. And we had a series of 8 public hearings and 2 user forums that started at the end of the first quarter, ended early in the second quarter. And so now the board will take all of that input back and begin redeliberations in the coming weeks. The second of our big 3, the revenue and expense recognition project, not quite as far along, but we did have a preliminary views document come out last summer. It followed a similar path in that we had an extra long 8-month comment period. We got a lot of good comments, a lot of good substantive comments on that. Also, in conjunction with the financial reporting model, had public hearings on this project as well in user forums, which have now been concluded. We'll take all of that information and begin redeliberations on that project in the coming weeks as well. The final of our big 3, the disclosure framework, was supposed to be entering a kind of approval of a final concept statement phase, but in responding to comments from the exposure draft, we added some characteristics to essentiality being one of the key tenets of this project, and trying to determine what should be included in footnote disclosures. Information should be essential to the users. Based on feedback, we added some characteristics of essentiality from some of our stakeholders, in particular through the GASAC. We heard that change was some considered to be significant. In light of those changes and that feedback, the board decided to voted to re-expose that concept statement just to get any additional feedback on that change that we made, the addition of those characteristics. And so that re-exposure draft will be coming out shortly instead of a final concept statement. We did issue an exposure draft on our compensated absences practice issue project during the quarter, and I'll close with our post-implementation review process. We have 6 projects undergoing PIR right now. We updated the Oversight Committee yesterday on the activities during the quarter for all of those, with the pensions and the fair value standard being the furthest along of those PIRs, both being in stage 2. So with that, I'll be happy to answer any questions anybody has.
Thanks so much, Joel. The questions for Joel. Larry.
Yeah, Joel, how's the transition to the new technical director, Alan, going?
Larry, it's going really well. That the 6 weeks was pretty intense, I think Alan would say, but Dave Bean and I kind of worked with Dave, and Dave did a lot of the work, obviously being 30 years the director. He did a really good job. I know that transitioning is a lot dependent on the person that is doing the transitioning as opposed to the person that's coming in. And Dave did a lot of prep work prior to Alan getting here, making sure that he had everything prepared to be covered, and that 6 weeks to get through it all. And he and Alan, even though it was virtual predominantly, they worked really well together and got a lot of information transitioned. Alan has certainly hit the ground running, and I have yet to see really any kind of bumps at all. We're running along smoothly, so I think it's going really well.
Other questions for Joel? If not, thanks so much, Joel. We'll now turn to the report of the GASAC chair. Robert?
Thank you, Chair Casey. My report starts on master page 162 of your materials, and it's covering through early April, including our first meeting of the year on April 6th. We had an action-packed day via Zoom. We had all 30 council members participating, which is great to have happen. And that included 10 new members that the trustees appointed last year, who we went through an orientation session with those 10 new members earlier in March, and welcomed their participation. And several of them dove right in, which is exactly what we want to see and hear, and provided feedback. We had a number of topics that the council discussed at the April 6th meeting. We provided feedback on the pre-agenda research that the GASB is doing on investment fees, and we also were able to provide some feedback on their latest omnibus project. The other technical agenda items that we had more significant discussions on included the conceptual framework on disclosure. As Joel just mentioned, it was a timely conversation for the council to have, and provided feedback on what at that point was thought to be the pre-ballot draft of a final statement. But as Joel did mention, some of the commentary from the GASAC based on the redeliberations and the concepts that the board had included on the essentiality, is leading to re-exposing that. And I think that's a good example on how the GASAC, and I know the FASAC does the same thing on the private sector side, provides an opportunity for formal stakeholder input to the board's deliberations and standard setting processes. So we appreciate that and appreciate the board listening to some of the issues that were raised by the council members. We also had significant discussion on the prior period adjustments, accounting changes, and error corrections project. There are a number of elements of that are making some, that would propose a number of changes to the current standards. And so there was a lengthy discussion with the staff and the board in that regard on the various tentative decisions prior to their consideration of a pre-ballot draft and an exposure draft on that project, with a variety of display, reporting issues, and things related to changes in circumstances, changes in accounting principles, what happens with display of reporting of beginning balances, and so on. So we're glad to do that. We also, at every council meeting, provide an opportunity for the GASAC members to apprise the GASB members and staff of emerging issues in brief that the board may need to consider. And those included at this last meeting, commentary about enterprise risk management, ESG reporting, and statewide 401k-like plans for non-governmental employees. We also had the opportunity to welcome formally Alan Skelton to the quote other side of the table as he stepped down from his role as vice chair of the GASAC to assume the director of research and technical activities, and really appreciate having Alan in the seat. We loved everything that David did for 30 years, but I think we got off to a great start, and including his commentary and discussing for particularly the new members of the council the importance of the post-implementation review process and how the board and the staff are accomplishing that. Lastly, at this meeting, one of the most important things that the council does annually is provide feedback to the board on prioritization of their research and technical agenda. And so we went through that process, getting feedback from all 30 members of the council, and the highest ranked topics, the top 4 or 5 included capital assets, going concern disclosures, electronic financial reporting, interim financial reporting, and deferrals. And then there were 5 others which were also noted in my report for your reference. And a number of these topics have been on the list for a number of years, and like capital assets is an ongoing research project of the board and the staff. And these other topics tend to bubble up to the top as they have time, as they're getting through some of their other agenda items, including the big 3. So our next meeting of the GASAC will be held in August on the 9th and 10th. Again, being in a virtual format, we welcome the opportunity for any of the trustees who have time in their schedule to participate and observe the meeting. And with that, Madam Chair, I'd be happy to take any questions on my report.
Thanks very much, Robert. Are there questions for Robert? Hearing none, thanks very much, Robert. Our next item is a report from the Oversight Committee from Eloise Foster and Tim Ryan. Eloise?
Thank you, Kathy. The Standard Setting Process Oversight Committee met yesterday morning, and our first report was from GASB Chair, Joel Black. Joel highlighted GASB's due process efforts related to the financial reporting model and the revenue and expense recognition project. He also spoke about the comment letters received. He talked about the public hearings that had been held and the significant efforts that the GASB continues to devote to COVID-19 response. Joel also reviewed the status of major agenda projects, noting how the number of years spent on each project compares to the established benchmark ranges. And he discussed the input that GASB had received from the GASAC on the priority of potential agenda projects. Alan Skelton provided us an update on the first quarter activity for the GASB's PIR projects. And he also spoke about their plans for the remainder of the year. These plans include holding roundtables on the Pension and Fair Value Project, and also on conducting cost and effort surveys on 2 other PIR projects. And now I'll turn it over to Tim for the FASB update.
Thank you, Eloise. It's good to see everybody today. Hope you're all doing well, and thank you for the time and interest in the committee process. We also heard at the committee meeting from Rich Jones, and much of what he covered in the earlier update we discussed, but in a bit more detail. And our focus included really 4 key areas. We spent a good amount of time going through the agenda consultation process, which, as Rich just pointed out, has just begun. Our focus as trustees was on really 2 key areas. One, we were very interested in the feedback that Rich and the team had received so far from that process, again, as it's just kicked it off. And 2, we were very interested in making sure that we were getting feedback from all types of stakeholders and make sure we were being inclusive in that process. And we had a good discussion about that process and next steps. The next area that we spent time on was on the PIR process, which I can speak as now a trustee just beginning my 2nd year, we know is so important to the standing setting process as we have continuous learning and continuous improvement. Rich and Hillary Solo gave us an update on the PIR process on the 3 standards that Rich had mentioned earlier, and we were interested in what they were learning and then also how we're responding to what we're learning in that process. And we had a good discussion about that, lessons learned and actions being taken or actions being considered in a good discussion. We then focused on, Rich gave us an update on the major projects. Joel, I guess I'm happy to tell you we have more than the big 3. Rich has a slightly bigger agenda in terms of the items that are on the agenda, and we went through each of those items and we got an update of what was going well, areas of focus where Rich and his team had some concerns, and it was a good, robust discussion. And we'll be getting another update later on this year on the major agenda item topics. And then lastly, we focused on the IASB and the FASB and with this overlap and how the 2 organizations are coordinated, areas of divergence, and how Rich and his team are communicating with the IASB. So a really good substantive discussion in those 4 areas. We then switched topics and we focused on the PCC, and we were joined by Sue Cosper, who is the FASB board liaison. And Sue gave us an update on the April PCC meeting, and she gave us her perspectives on that meeting. We talked earlier, Rick Reisig, who is a former PCC member, now a trustee, he observed that meeting, and Rick gave us his perspectives. And Rick, I might turn it to you, maybe just for some of your brief perspectives on that meeting.
Yeah, certainly. Thanks a lot, Tim. The meeting really was, as Chairperson Candy Wright mentioned, very interactive, it was a great learning discussion, focused a lot on the share-based payment comments that had been received from the exposure draft. So I think it was a great meeting. I'm looking forward to what they're going to do in June. And Candy's very, I think, proactive in drawing out the conversation of the members. And of course, the FASB members are very open to listening and sharing their ideas, steering them in the right direction. So it was a great meeting, Tim.
Thank you, Rick, very much. And thank you for observing that meeting. We really appreciate it. We then met with Chair Wright in executive session as a committee, and we asked her, we had our annual meeting, and we got her report on the committee. It was similar to what she had gone through here. And then we also we got her perspectives on just the interactions with the FASB, the teamwork, the coordination, any areas of tension, which there were none. And we had a good discussion just around how PCC is interacting with the FASB. And I'm happy to report things are going very well on the coordination. Sue Cosper, Candy, and the other team members are doing a really good job. So that's kind of it. Eloise, I'll turn it back to you.
Thank you, Tim. As a part of our oversight responsibilities, we encourage trustees to observe at least one advisory group or a FASB or a GASB board meeting each year. And at each of our committee members, we discuss the meetings that committee members have attended. In addition to Rich talking about the April PCC meeting, David Lillard and I reported and shared our observations on the April GASAC meeting. Mary indicated earlier that she had gone to the FASB lean-in session. She reported on that. Mary also went to one of the GASB user forums, and Mary really went to 2 other meetings. She attended the FASB academic research webinar for leases and for revenues. So Mary was a busy woman last month. We like to take the opportunity in this forum to hear from other trustees who have had an opportunity to observe a meeting. One of our newest trustees, Lynnette Kelly, observed one of the GASB public hearings that was held last month. And Lynnette, would you like to share some of your observations from that meeting?
Sure, thanks, Eloise. I had the opportunity to observe the April 13th GASB public hearing on the financial reporting model. And as a new trustee, I was really impressed with the thoughtful perspectives that were shared by the commenters, specifically the folks from Truth in Accounting, as well as others. There was a respectful dialogue that followed and some really good back and forth. And what I noted is the sincere attempt by everyone in the public hearing to really understand the perspectives of the other side and the other people's point of view. So again, as a new trustee, I was really impressed with the public hearing process.
Thank you, Lynnette. Kathy, that concludes the report of the Oversight Committee.
Thanks so much, Eloise and Tim. The next report is from our FAF Executive Director, John Auchincloss. John?
Yes, thanks, Kathy. It's been almost 14 months now that we have been working in a remote environment. And I'm very happy to report that we think there's some light at the end of the tunnel. Last month, we made a decision to reopen our offices for our staff in both Norwalk and Washington after Labor Day. And of course, we're assuming that we don't have any unforeseen negative developments in the pandemic between now and then. In fact, as everyone is aware, conditions do seem to be ameliorating. And so while we have not yet made corresponding decisions about when we will reopen our offices to visitors or resume business travel, we are hopeful that we will be able to make those decisions in the near future. We are well along in our planning for a post-COVID workplace and are working to define the principles that will guide our future work policies and our space requirements. As I've noted previously, I think our organization has done an admirable job of working under challenging conditions, and I would particularly congratulate the FASB and GASB for their work in meeting the needs of stakeholders during the pandemic. In fact, that is a theme we explore in the FAF's 2020 annual report, which I'm happy to say is nearly complete, with the theme of standards that work from Main Street to Wall Street. It highlights significant FASB, GASB, FAF achievements during 2020. It will be posted online a little later this month, and with on-demand print copies available on request. I'd like to say a brief word update on our what we call our CVNE project, which stands for Content, Vision, and Enablement. This is a project that is aiming to bring our publication systems and processes onto a modern and robust platform. I'm happy to report we completed the second foundational phase of the project in April, and we have kicked off the implementation phase earlier this month. The project is on track to be completed sometime in the middle of next year. We are confident that this project is going to provide tremendous value to the organization through providing a strong technology backbone, along with better internal processes that can continue to adapt as our needs and the available technologies change. Finally, I'd like to mention our strategic planning process. As we have previously reported, the FAF launched a strategic planning process in the fall of 2020 that included extensive stakeholder outreach, both through an online survey and one-on-one interviews, which of course we had to conduct virtually. The trustees have evaluated the results of this initial round of stakeholder input and decided that they would like to conduct additional outreach. When our Board of Trustees feel they have received and analyzed a sufficiently diverse range of views from stakeholders, we plan to publish a draft strategic plan for public comment. At this point, however, we have not yet determined a publication date for a draft plan. So Kathy, unless there are questions, that is my report.
Thanks very much. I appreciate that. Our final report of today is from our treasurer, Eloise Foster. Eloise?
Thank you, Kathy. Today's report is an update on the FASB financial status for the 3 months ending March 31, 2021. And those results are reflected on master page 165. The net assets of the FAF have grown by $33 million in the first quarter of 2021. This increase acknowledges that all accounting support fees were recognized at the beginning of the year. The $508,000 in savings represents the delayed onboarding of the FASB Deputy Director, and it also represents a reduction in FAF relocation expenses, professional fees, and other operating costs. These savings were offset by an unfavorable variance in investment income of $379,000, basically due to market conditions. There are 2 vacant positions throughout the organization as of March 31st, but overall, at the close of the first quarter of 2021, the FASB is in good shape and our balance sheet remains strong. Madam Chair, that concludes the Treasurer's report.
Thanks very much, Eloise. This marks the end of our public session, and I want to thank everyone again for joining us today in our webcast. Want to remind everyone that our next Board of Trustees meeting will be held virtually on Tuesday, August 24th, and we look forward to seeing you all joining us then. Thank you and have a great day.